Hello, squad. Welcome to Coach's Playbook. It's the 23rd of February. Dan's back. I'm back. Mick's gone. There's the attendance. Today, we're talking about how to use stops in day trading, which is a super important topic as far as risk management and just we were talking about standard operating procedures right before we got on. And this is a standard operating procedure for every trader. You got to be comfortable using it, when to move it, when not to move it. But first, before we dive into that, Dan, my understanding is you have a trader shout out.
I do. David Etter over here up a little over $2,600 today.
Oh,
So big moves for him over there. And then, yeah,
What's
we'll
he
stick with
trading?
him. Guys, I'm not that prepared over here.
Sorry
Hang
to put
on.
you on the spot.
Put me on the spot, but we can find out.
see, when Mick's gone, Dan takes over as risk manager for the firm and runs it with an iron fist.
He's trading the S&P 500.
Excellent.
There
Big
we go.
moves today.
Yeah,
Yeah,
very big moves in these equity markets.
that's what I like about recording the live show. We can talk about the real stuff. This was harkening back to earlier this year as far as getting some movement, especially in, like I texted out this morning about the robustly valued assets. Big moves in Bitcoin, Tesla, although it's really rallied back by this point. Last I checked, Tesla wasn't even down that much anymore today.
But
So,
Tesla's been down. Yesterday they were down 700 or down to 700 a share. Um, Tesla's down.
it may well be a, $10 trillion company by 2030, but it's still not going to be green in every time frame. In every, I feel like there's been this march towards we're just doing Tesla infinity type thing. But
Right. Tesla's 680 right now. So still down a little bit on the day.
right, which only puts it at 3,000 plus in split adjusted prices.
Right.
So they're doing okay. I don't worry too much about Elon Musk. But for those of you that aren't the founder of an electric car battery conglomerate, you might have to learn how to move some stops around when you're day trading. So Hogue, as our kind of resident expert around here, I thought it might be good for you to weigh in first of kind of how you go about using and positioning your stops in your standard day when you're trading.
Okay. The one thing that people kind of come to me quite a bit and talk about is the fact that they're kind of considering using a stop as kind of a static level, or I only want to lose this much on any given trade. And while I appreciate the risk management in that, they're leaving one part of it out, and that part is the dynamic nature of the markets. There's going to be opportunities that are going to present bigger profit opportunities that are probably going to require a little bit more risk. And of course, on the other side, there's opportunities that are going to offer smaller profit opportunities that may give you a more refined or defined, I should say, and smaller amount of risk. So, as far as I'm concerned, the risk has to match the reward. And I always think of things risk first. If I'm looking at a trade and I'm saying, this looks like a good trade location, but the point of invalidation seems kind of far away, I'm probably going to pass on the trade, or I'm going to try and get into the trade a little bit closer to that where I think that stop level needs to be. Stops are there to help protect us when the trade is kind of proving wrong. That's why, when people say, well, it was coming close to my stop and I moved my stop further away and I got stopped at anyways, that's not something that we definitely want to make a practice of. We just continue making our losses bigger. So, I'm always looking for trades with risk first. If the risk is small, then I'm going to look at the other side. I'm going to say, okay, if I'm risking 15 ticks in crude oil to get into this trade, is it probable and likely that I'm going to be able to realize a 30 or a 45 tick profit if this goes my way? And if I can say yes, I'm in, stops in, profit targets in, and we see what happens. So
Yeah,
it's
that's
important, I think, to just remember that the price levels are dynamic as the markets are. If it's too far away, you can always size down.
Right. What you kind of got into there, talking about moving the stops when something gets close, is it's sort of the trading version of the real life rhetorical argument when people are moving the goalpost on issues. You
Right.
guys have all heard of people moving the goalpost. It's never said in a positive way. So when you move your stop back, you are moving the goalpost. You're going to debate jail for that. Dan, how about you? Maybe specifically when you might be looking to move stops. I don't know if you do that often as far as your trading, but just was interested in your thoughts on it.
Yeah, I mean it's such a common question. Do I move stops? How do you move stops? When do I move stops? First off, I'm going to just be very blunt. Everyone is going to be different. So what I do is not going to work for you. But to have an idea and kind of frame it out the same way, I think is beneficial. First off, day trading, moving that stops, I'm kind of against it. It's all in, all out. Take that profit or take that loss. Now, if you're looking to catch a big run, if you're trying to take advantage of a directional, big moving market and you catch an open, you're long the open and it keeps going and you get that little bit of a pullback. And your question is, do I get out here or do I want to let this go? Well, a lot of times we want to let that go. We want to maximize profits as best as possible. Those pullbacks are inevitable, and it's just a part of trading. We continue to find value. As it pulls back, it brings in new buyers, and it's going to extend it a little bit higher. We love that stuff. We want to be a part of that. And when we start to see those pullbacks, those are the points where I'm willing to say, okay, now we can start to bring this stop up. I'm not going to bring the stop up on the initial move and say, if it comes back to here, I need some sort of point of validation to validate why I have the stop here. Now, if the market starts to go higher, we see that pullback and then it picks back up on its trend, then we can say, I'm willing to put my stop just below this area because you know what? If the market comes back on me and makes a new low here, I'm going to start to question things. And I'm going to be more thinking maybe this is actually just going to be a reversal and the market's going to come right back and we're going to lose that ground we covered. Those are the times that when it comes to day trading, I'm going to really consider moving the stop. And I'm just looking for those points of validation that's going to allow me to say, if the market gets here, I should probably start looking in the other direction. Now, I know we have some swing traders out there too, so I do want to touch on that concept of moving those stops. First off, if you're carrying a position overnight, I'm a big fan of at that point, if I'm going to stay in a trade for 1, 2, 3, 4, 5, 6, 7, 8, 12 days, that's when the stops are going to get moved. And those stops are strictly going to get moved again, pretty much off for the exact same reason. I got to find those points of validation where I say, if the market gets back here, I'm going to look for it to retrace. I'm going to look for it to come back to where I got in. And I'd like to get out of that trade, lock in that profit, get a good night's sleep, knowing that if I wake up in the morning and I'm stopped out, I've made some money. But for the most part, when it comes to day trading, I'm not a big fan of moving those stops. We're not looking for those big, huge trending moves on a regular basis. More often than not, like John said, we're, risking 15 to make 30 ticks or something of that nature. There's no point in moving the stop at that. Take that profit or take that loss, move on to the next trade. Now, if you start to see market conditions have changed, say we get some crazy news headline that's going to increase volatility. Volatility is going to skyrocket. Market states change. Things have changed from when you initially put that trade on. At that point, you can tighten those stops up. You can get the hell out of that trade, wait for something to happen. But unless something like that happens, stay out. Let the profit or the stop loss hit.
So this is a good lead in. Dan and I are going to be recording the Limit Up podcast after this, and we're talking about time frames of different trades and how it affects what you're doing. And you were talking about moving stops in longer term trades, and it connects to what Hogue said about you face opportunity costs and capital allocation issues more on longer term trades, and then you have to reevaluate whether is what I'm doing now giving me the best ROI, or should I get out of this trade because it's taking too long and deploy it somewhere else? But if you're just scalping, if you're just a pure day trader, you're probably not going to run into that as often unless the markets are just incredibly quiet, in which case there's probably not all that much opportunity there. JD, is there anything you'd like to add as far as your outlook on that? Do you move stops at all besides for news or stuff like that?
I try not to. Maybe if the market's moving in my direction, it gets to it extends to a new level and I'm still confident in the direction, maybe I'll adjust my exit strategy just to ensure some profits, you know. I'll never use a trailing stop again. Cancel
Is
those.
there a story behind that?
We'll get
Cancel
into that
culture's
later.
taking those out.
Yeah, you hear
But
that
I mean-
trailing stop, you're canceled.
Yeah. But I mean, we were just touching on the S&P 500 a little bit today, right when we started, and we all know how they love to run stops in the S&P 500. It's inevitable, you know. So it almost kind of works to almost work your trade backwards, you know. If you can look at your chart and identify some levels where you know stops are building up, maybe adjust your strategy around that. Yeah, working it backwards, and you got to give it a little room to breathe too. I find if I'm trading the S&P and it's giving me profits really fast, something's fishy. So maybe I wouldn't adjust the stop. Maybe I'd take a little off the table.
Trailing stops is definitely an art form, isn't it, JD?
I wouldn't consider it an art form.
JD
I mean,
wants him canceled. No
if
such
you want to
thing
get
as a
stopped
trailing
out real
stop.
fast, put a trailer on for sure.
Yeah, it would have to be a very unique situation. And so much of your competition when you're trading in the futures market, so much of algorithmic trading is finding the stops, right? It's sort of a game that you can play on a day-to-day basis. You know, if the market's moving, if the market's not moving, where are the stops? Let's see if we can trigger it. You know, if you read Market Wizards or any of that, there's all these stories about people who kind of made their big trade in a career by finding these really unique ways. And I recall one example, I forgot who it was, from the gold market, that was all about finding the right stops to run.
Mm-hmm.
You're leaving yourself unexposed. Dan, you're better with military terminology. You're leaving your flank open.
Yeah, there you go. There you
Good.
go.
Look at that. For a whole world of pain if you're just blindly trailing stops. I wish we had some more data on that. Maybe down the road we can analyze sort of using combine data or something like that. But it would be really interesting to see what the actual difference in returns are with the back testing and something like that. But I would have to believe that the blind trailing stops are going to get you kind of screwed in the long run.
Absolutely. Markets move. It's our job. That's where our benefit of being a discretionary trader is we're not automated. We're not forced to trail that stop as 10 ticks. You know, there's nothing like that. We can choose where we want to place that stop based off of all the time and energy and work we've put into learning these markets. That's how we get to place our stops. The second we use something as mechanical as a 10 tick trailing stop or whatever, you know, any sort of automated trailing stop like that, is the second we're giving up our edge as discretionary traders. That's something we have as an advantage. And I think it's a question I get asked a lot is, you know, how do you find an edge in trading? Well, first off, your discretion is an edge. It's a benefit. The time that you've spent staring at these markets, it's a huge edge that you have. Use that. Listen to what you've learned over these years and years of doing this. And most people have spent thousands of dollars trying to get to a point of creating that edge of learning the markets, yet they don't realize they have an edge. And that discretion is a huge edge that you have. Take advantage of it.
Yeah. How do you guys deal psychologically with not bailing out of trades early? Say, I think one of the hardest things is, say you set your profit target and it's close. How do you evaluate that situation? Maybe Hogue, you've been in this game for a while. I'll do it first, because that was always my biggest thing. If I had an idea that I'm like, I'm going to take it for this much, and it's this much minus 5-10%.
So that's a win.
Oh, it's a win, but
Lock it in.
Yeah, you have to be flexible. If you're too rigid on your exit, it's just going to come right back and
I
bite
call
you.
it my 10% rule.
Mm-hmm.
If I've got a 40 tick profit target on a trade and I'm within 4 ticks of that profit target, I can take it and call it a full win, full profit target. And 10% meaning 5 or 15%. Well, you get that close to a profit target and you don't take it, you get what you deserve.
Do you ever take off part of it and let some run? Because I'm trying to figure out how you can get to. Sometimes I get too draconian and sort of my ideas of strategies and stuff like that. It's if you really want to, in the long run, you're making a bunch of trades and you want to hit, say, a 2-to-1 reward the risk ratio or something like that. If you're always taking it off 15% early, you're gonna. If you're taking it off 15% early and taking the full loss and you're losers, you're gonna warp that a little bit. So I was wondering, because one thing I was never great at, but if like I believed in a trade, is taking some off and letting some run a little bit. But is that something that you generally stay away from, or?
Well, I'm usually looking for 2-to-1 as the least in any trade I'm taking as far as reward over risk is concerned. There's trades and days I can, make 3, 4, 5, 10 times what I risk on a trade. And I tend to go all in and all out like Dan, but there have been times when I'll be in really good trade location and then I'll see a potential breakout continuation where I'm already out of one of them and I'll let that other one run to see what happens. Most of the time it seems like I'm not very successful at it, but I do give it a try from time to time.
Jack, I know where you're leading with this question.
Do you?
Yeah, I do. You're looking, how do you move the one stop and let one run? How do you lock in profits? And then this is this is where the art form that Hoag's talking about really comes into play. It really comes down to when you hit that profit target, say you've got 2 on, you want to let one run, right?
Yeah.
But you don't want to leave that stop all the way in the negative. You want to at least lock in those profits on that one winner. Like, do you bring that new stop up to break even and just let that guy go? And I think it's a true art form. This is where it gets difficult, but definitely if you're in a trade, you have multiple contracts off, and let's say you take 50% off. If you got 2 on, you take 1 off. What do you do with that stop? That stop to me is you look at it as 2 different trades in a sense. You can bring that stop up to break even or a little bit more, or find that point of invalidation to say, look, that one contract locked in some really good profits. I don't want to lose that. I don't want to risk that. I want to hold on to that. But I really want to see if this market can extend in the direction. That's when it comes into that same concept of where do I bring my stop up? Just like with that first thing we were talking about, find those points of invalidation and you can start bringing that stop up with it. But it's tough. It's tough. I think from a day trading perspective, all in, all out, stick with it. It's going to be more beneficial than trying to create this difficulty of trailing, moving, adjusting. I was talking with a trader the other day, doing that, got confused, didn't understand why he got one fill here and there. And it took a little while to try to explain. You had too many moving parts. Slow it down. Keep it a little bit more simple for yourself, and it really tends to help out.
Yeah, and you can really, the market will tell you whether or not it's going to give you a rip or not. You got to know what kind of environment you're in. If you're in a trend day and you're on the right side, maybe you got the potential to get that extra 10 or 20 ticks. But if you're just grinding sideways, fairly early on how you're going to play your stops. Does that make a lot of sense? I feel like I cut that too short, but
no, you hit it.
No,
you hit it
definitely
the nail
was,
on the head.
It was wise.
You definitely do
JD
know
knows.
if it's gonna rip.
It's like Bo knows. Update myself. Yeah, no, you're totally right on that. I think that there was one point that is escaping me at the moment. Maybe I'll think about it soon, but sometimes in these dark days of February in Chicago, they just escape you. You have to be okay with that. So I'm just
Jack, this is the first sunny day we've had in 3 weeks.
Oh, you know what though? You're right. I'm just sitting. I always forgot because when I bought this place, there was sunshine that came through. I'm in like a guest bedroom that has carpet right now, and they built a building next to us, so now it's dark. So
okay.
I'm looking at a brick wall out there. So that's fun stuff. Well, anyway, does anyone have any last points they want to put out about stops for this discussion today?
It's easy to overmanage any trades. I've dealt with a lot of folks who've basically have always gotten out by using their trailing stop. They've never really reached a profit target because they tend to keep their trailing stops too close. Consider trying a few times, letting it go. Let it go to your profit target. As long as your profit targets are reasonable, 2 to 1 or better, your risk, try and let it play out. Another thing, if you're too quick to move your stop to break even or break even +1, a lot of folks come to me and say, this keeps happening to me. I keep moving my stop up and the market will come hit my stop and then the trade will play without me. Well, it's because you haven't given the trade the opportunity to prove that it is going to work for you. You have to give it the chance to reach its point of invalidation before you're going to possibly get to your profit target. So don't overmanage your trading. I think a lot of people overmanage, and I get it. It's important to us. It's money. But it seems like the less you manage, the better off you're going to do in a lot of cases.
Yeah, we don't see a lot of traders under managing or under trading. It's over managing and over trading is by far the quadrant. If we had, how much you trade, how much you manage the trade once you're in, there's a very crowded quadrant for over trading, over managing the trade. So just take an assessment with yourself and see where you kind of fit on that. Where does your
Yeah.
weakness lie? Are you over managing, over trading, or maybe a few of you out there are just YOLOers who are completely under managing trades. It's another option too. So with that, Dan, would you like to? I hear you have a quote for us.
Always. I went through a few different ones today. Some were a little crazy. So we've got this one. I kind of like this too. At the end of the day, the goals are simple: safety and security. Manage your trades, have a stop in place, protect yourself no matter what happens. If the last 11 and a half, 12 months haven't taught us anything about the shit can hit the fan fast, then I don't know what to tell you. Have protection, protect yourself, use those stops. And that comes from Jody Rell. I don't know who that is, but I thought it was a good quote.
Oh yeah, no, that's I was gonna make a joke there that was in bad taste, so I won't do it. I was trying to think of some terrible person that he could be that you don't know. Like,
I think it's a she. She has a picture.
Oh, Jody. Yeah.
Yeah.
Okay. Makes sense. All right. Well, with that, that's all we got today for Coach's Playbook. Be sure to check out the forecast and recap on our YouTube channel. In the meantime, we'll see you next week. Hogue, do you have some words of parting wisdom?
Sure. Don't be one of those over managers. Let your stops work. Don't follow them too tightly. Try and get those profit targets, and any profit you get within 10% of your profit, your real profit target, is money to me. So get out there and profit. Looking forward to seeing you succeeding. Trade well.